Today I want to share 5 main reasons to consider doing tax planning as you're approaching retirement or right at the point of retirement. It's very important that you take a look at your tax plan for your retirement years during that period of time. While you still have some time to make some changes or make some tweaks or do some things that are going to improve that tax plan over your retirement years. Reason number 1 is you can create some flexibility in your plan. Most people have a big majority of their money in their tax deferred accounts. That means most people don't have tax diversification. So if you look at this and do some strategic shifting or change where you're saving some money, you can create some tax diversification for yourself, and that's going to give you some greater flexibility when you're retired. Number 2 is you can reduce your lifetime tax bill. You can reduce it very significantly if you do good planning. I show a sample plan in July for Jim and Joan Zample. They're a couple that have between $4.5 and $5 million. And by doing some tax planning, they can reduce their lifetime tax bill from about $3.4 million to about $2.1 million. That's for a sample couple, but it works that way in real life too. So if you do some good tax planning, you can make a significant dent in the amount of taxes you're going to pay over your retirement years. Number 3 is your IRMAA cost. IRMAA is income-related monthly adjustment amount, and that is a surcharge that you pay on your Part B Medicare premium, your Part D Medicare premium, and that surcharge is based on your income. When you hit an age where you have to take required minimum distributions, then your income goes up whether you need that money or not. And that can push you into a higher IRMAA bracket. Now, this month in August of 2024, I did another sample plan for Jim and Joan Zample, and I showed what their IRMAA cost would be if they didn't do any of the tax planning I had discussed last month versus if they did. And their IRMAA cost would be $258,000 without the planning. And if they implement some of those strategies, it reduces that lifetime IRMAA cost to $68,000. That's a significant reduction in a surcharge for healthcare that is going to be the same no matter what you pay for it. So they don't want to pay more. Nobody wants to pay more for the exact same thing. So that's reason number 3. Reason number 4 is what we call the widow's tax. When the first person passes away, whether that's Jim or Joan, the survivor would have a higher tax rate because they're going to be filing as a single filer instead of married filing joint. And that can increase that annual tax significantly. Well, if there's been some good tax planning done, that survivor can be prepared and ready and know where they're going to pull money to cover expenses without increasing their taxes significantly. They can use those Roth accounts, they can use other planning that's in place, but that is a significant reason to do some planning ahead of time, because once you reach that point, it's too late to do the planning. You've got to do the planning ahead of time. And then reason number 5 is what your heirs will receive. If Jim and Joan don't do the tax planning that I demonstrated in the sample plan, then they would end up with about 40% of what they leave to their heirs would be tax deferred. Their heirs would have to receive it as a tax deferred account and settle up on those taxes over, at the most, a 10-year period of time. That's under the new Secure Act rules. If Jim and Joan do that planning, they get everything in place, then their heirs are going to end up with primarily tax-free assets. The taxable assets that they might inherit would most likely get a step up in basis, and the Roth accounts would be tax-free. And so all of that planning is good. It's good for them while they're living. It's good for the widow while the widow is alone, and it's good for their children when their children inherit their money. So those 5 reasons are 5 very good reasons to do the tax planning before you retire, as you're approaching retirement, or even at the beginning of retirement while you have some time to make some changes. So I hope that's helpful. Be sure and subscribe so you don't miss any other good information that I'm going to share in the future, and I look forward to seeing you in the next video.